All right, let's get right into the analysis here. We're going to be looking at Spider 65-minute chart here. So as you can see, this market tumbled a little bit in this week right here. As you can see, this is what happened. Let's see, this is today, which is Thursday. This is Wednesday, Tuesday, Monday. So you can see last couple weeks we've been in this very much of a chop fest here. We gapped down, got up, came down, gap back up, gap back down, sideways, and then we gapped up here. So after, I think what happened was when we saw that island down gap right here, things got extremely hectic. As you can see, once that island down gap was open, this market tumbled down quite a bit for the entire month of August, at least half month, the entire half month for the August. And then we seemingly found support here at 432 or so, and then we started making these higher lows here, as you can see, and this is a reason why we do have that uptrend support noted with that purple or pink dotted line there, and that's the level. We did find that support right here, as you can see, a couple days here, and traders really, I think the buyers are really relying on it. Actually, last night, I sort of thought that because we've been hitting this level so many times, as you can see right here, right? And I could see so many traders possibly putting their stops underneath it. I actually thought that we may see this level breaking, price breaking below this level and just kind of creating a sort of panic / trap, getting everybody's stops taken out before getting back. And obviously I was bullish in the midterm of sense. I just didn't expect to see a gap up today, and this is why, understanding these levels and, at least understanding trend is up, right? In the short to, a midterm here with the cultivation of higher highs and higher lows. And market obviously felt very generous about this rising uptrend support. Again, a lot of times these support levels get retested too many times. It gets too much attention, and the traders trying to rely on it too much. Market likes more often than not, market likes to kind of break that habit by creating some fear, creating some shenanigan, breaking below that level, and then everybody start panicking, thinking that's gonna be it, and the market goes back up. I thought that might be the scenario, just the way this market been, you know what I'm saying, just how lethargic this market has been this entire week and late last week. However, we actually saw a gap up. And I think with this gap, a lot of people are, from what I can see through social media and everything else, a lot of people are seemingly not so happy about it. Maybe a lot of people were bearish then. I guess so. Maybe a lot of people are looking at the uptrend support. Maybe a lot of people are looking at this as a downtrend resistance. Maybe that was what was going on in the this week, as you can see right here. This level acting as resistance here, and resistance here, and we also saw the 5th hour plunge yesterday, but we did hold that rising uptrend support. Actually, I thought it was kind of interesting because I actually tweeted this out last night, comparing 2023 with the 1983. As you can see here, it's getting a lot of attraction and attention. As you can see, it has about 92,000 views so far as of today, 76 comments, 137 retweets, 600 likes, and 60 bookmarks. And I thought it was interesting as I was kind of reading through the comments. It's actually entertaining if you have time to do that and go ahead and just kind of go through the comments. It's mostly bearish, but you have to understand that this chart right here, it's not that I just put this chart together, right? I actually been observing this since 2022 here. This is the exact same chart. I mean, we haven't even begun to see any sort of upside move when I was first observing. So it's not that I scrapped that together just so I can get some sort of engagement or anything like that. It wasn't that, as you can see. And then I start to see some development. Right, I start to see something. You can see this is NASDAQ here, put some moving averages. I actually also made a video about this. You can see there's a death cross there. There's a golden cross here. That's 1983. and that's 2023 right here. So that cross, golden cross, and that was the first when we, so again, this was around, I believe, April and May. First we saw that significant signal, that development of what I originally saw when nobody else did. Remember, nobody was talking about this back in October lows. And then as I start to see more evidence, right, more evidence of it playing out, as you can see even here, this is S&P 500. Not only we had that 1982, 2023 thing going, but we also had the bullish divergence, very, very similar to what we saw during 1982. It's funny because somebody actually tweeted, replied to me on this chart right here, and kind of saying, well, when was the last time, you know, this sort of a comparison chart ever played out? All right, so when did, there's a comment there. I thought this was interesting. When did comparing previous year's chart ever worked? Please list. So I did go ahead and list this one right here. This is 2020 versus 1962. As you can see how flawlessly, I mean, can you imagine during 2020 when the entire world was in fear? You know, in 1983, we made that move and then it started slowing down, right? Similar here, we made that very swift move here, especially during when it bottomed the March lows. And obviously, the major low was in October, but market was trying to find the traction, but it was it was very lethargic, and also it was very volatile. But really, that swift bullish move came about after March low right here, right? That's the March low, and then market really broke out to the upside, which is very similar, I would have to say, to what happened in 1983 right here. As you can see it, right, we had a very swift move, and obviously market does not go straight up, right? It's gonna, it needs, after some kind of run, it needs to kind of slow down. Sort of like if you're running, you cannot keep running forever. You need to slow down, you need to take a rest. And so this is the resting part, right? But if you thought that this was it in 1983, after this kind of run, this thing is going to come right back down. Well, market actually kept going higher and higher and higher and higher, riding that, you can see this is a daily chart, riding that short-term moving average here, the green moving average, right? That midterm was never even reclaimed or that retested. It's interesting to note that the midterm wasn't even retested here as well. Looking at the line chart on the candle, it sort of tagged it, I think, but on the line chart, as you can see, that midterm has not been tagged, similar to here, but that there's a short-term moving average continue to kind of act as support and riding that all the way, and that's what we saw in 1983. So interesting, we see a swift move, and then maybe some followed by some consolidation of some sort, like resting pattern similar to here, and possibly a market continuing. And I think there's a good chance, good probability we may kind of witness something like that towards the end of the year here. So let's go back to the 65-minute chart here. So we can see we have that you know, it got to right to that tiny. So we saw a gap up, and we made a run for it. And he came right to that tiny down gap. This is not an accident, guys. This is not a mistake. This is not a random occurrence. That when we made a move to the upside, it slowed down on the next down gap area, right? So that's why it's important that we track the gaps, because that's sort of how the market likes to move. You know, just battling, you know, against with these up gaps and down gaps, right? So this tiny down gap, that's what acts as resistance on the last hour, as you can see right here. And so going into tomorrow, right? Going into tomorrow, if we don't see a follow through, and if we do see a follow through, next level resistance is obviously the island down gap resistance here, 453 on Spider, which is similar to how this market came to that correction, about a week or so correction here right on that 453. Again, that's the opening. That's the opening price of Island Down Gap, 453, right? We got up to 453, market came back down. So if we do see a follow through tomorrow, we see some kind of an up gap tomorrow, a continuation to the upside, 453 is likely where it's gonna go, and it's gonna start to kind of respect that level. Because I think also, as I look at my oscillator, as you can see, the oscillator is not overbought as of today. Perfect. You can see we have at least one more update energy left. Perfect. See that's overbought right here. We're not there yet. So bulls do have energy, so that means bulls can push one more day tomorrow, and they really should utilize this, because they already had this oscillator crossing up in the middle part of it, because you can see it got up here, came down, and bears were not able to bring that oscillator back down. So in the middle zone, we are able to even yesterday this thing was not crossed up. It crossed up this morning after the gap up and the follow through, and in that process, obviously, we continue to hold that rising up trend support, right? So let's say we see a gap down or something like that, or downturn tomorrow morning, it is likely bears want to retest that 448, because that's an important level, because as you can see, that's the prior resistance here and the gap area, and you see that my micro term is residing. So 448 is like a double pivot, because the prior resistance, new support, that's the gap. This is where the gap happened. We gapped, we opened here 448. My micro term is in that vicinity. So if we do see a bounce here 448, I do think that level is going to act as support. So I think overall, if we do see a follow through tomorrow for 453 here, we see any sort of a gap down tomorrow morning, and we see weakness, then I think 448.85 going into tomorrow morning.